The unfortunate reality is that not all trades work out. Sometimes we have losses. I know, sad, right? Wish we didn't. It'd be great if we didn't, but that's the whole part of the trading game. You have hopefully many, many wins, but occasionally you have some losses as well. And a lot of it's just things that are out of our control, and sometimes it's in our control. I mean, not every indicator works perfectly every single time, of course. Not every trader is a perfect trader, and there's things like false signals that we learned about that can happen. And sometimes there's something that you think is an event, something major, but it really isn't. It's just some rumor, some noise, or some just temporary movement, maybe a retracement, whatever it might be. And so then we might experience a loss from that. Or there's unexpected events outside in the wider world. I mean, you think about during 2020 and the early days of the pandemic of COVID-19 and all that, how that was a dramatic impact across all different types of securities. And if we look at, let's say specifically, let's say the stock market, for example, where you have CEOs of companies as opposed to currencies or cryptocurrency, if the CEO all of a sudden dies, that's, unexpectedly, that's going to send a tremendous impact on your trading of that particular security. So there are things that we can control, things that we can't control. But one thing we have to do, a couple of things we have to do is be comfortable that there will be losses at times, and that's okay. And all successful traders reflect this, by the way. They're all very comfortable with having sometimes losing positions. The end of the day, we want to have more profit, more success than losses, and that's the whole point of the course, of course. But there is some action that we can actually take to limit our losses, some ways of placing orders correctly, and that's what stop losses is an order type that will really help us. And it's really important in terms of technical trading and being an active trader that you use this to help minimize your losses. Because if you're minimizing your losses, you've got good targets set up, you're using your indicators well, then you're going to have some profitability. So let's talk about stop losses a little bit here. And one thing to also consider too, as part of this too, is when a trade doesn't work out for you, being comfortable with these losses, you feel bad, right? You lose money, you feel bad, you might even question your ability, and don't. It's okay, it's normal. So don't be that. Don't question your ability. Maybe adjust your strategy if you feel you need to, but you're learning. It's all right. And you can always use paper trading and all that to test out your ideas and back testing as well. And you may experience the denial. I won't sell at a loss because I know it's coming back. If you ever see yourself saying that, then you're not so much technical trading, you're more hoping at that point. Remember, your indicators will tell you when to buy, but they'll also tell you when to sell as well, as far as when the trend, let's say, has stopped or slowed down or reversed. And many times we just get frustrated, right? It's a perfectly natural human being emotion. So understand that when you're experiencing that, that you're just really experiencing some frustration, and that there are some tactics we can do to minimize that frustration. And one thing to think of too, if you think about salespeople, right? I know, like, what? We're going to think about salespeople? But think about salespeople. They face rejection every day. Lots of people telling them no. All day long, they got people saying, no, I don't want the order. They won't take their phone calls. No, no, no. But successful salespeople know this, KNOW know this, and are actually taught that each no is part of a path that leads to a yes. And so if you get a yes, that's a sale, which equals commission, which equals money. So every time you experience maybe a slight loss, that's on your path to that greater yes, that greater profitability. And a stop loss is basically an order type that's going to limit your losses. It helps overcome things like that. No indicator is perfect, that there's false signals, big market events out of your control, and we have an automatic mechanism that we can kind of place ahead of time that if something happens, it'll limit your losses. So you're doing this ahead of time and automating things, and it's all part of the plan. Again, we have an overall plan. And if you think about, just in general about the plan and where a stop loss might fit in your overall plan, you have indicators that help you select securities, right? You're looking for trends, you're looking for opportunities. So the indicator is helping you make decisions on buying and selling. And then you have trading rules around that provide the discipline that we learned earlier in the course, as far as, actually taking action, that you're going to have some discipline around that. Maximizing our target profit maximization, or picking targets to maximize your profit, is all about maximizing profits. And then another way you can maximize your profits actually is minimizing your losses. And that's where the stop loss and that type of techniques help as far as minimizing losses. All right, so enough buildup as far as what stop loss and kind of where it fits, but it's so important that you really need to do it all the time. So let's talk about now in the next lesson as far as what is this stop loss thing and how do I actually use it?